How's it going, everyone? Welcome to another video. This video is going to be a trade recap video, mainly on a short trade on GU that I took yesterday. This was considerably, I was going to do, make it a swing trade and really hold it out. But typically I don't tend to do that with funded accounts, because if you've got, this trade did hit 40.8%. If you've got that much running, you don't want to just keep it running. You want to close your trade or take partials. I don't usually take partials. I tend to hold my trades all the way or close them. Partials have never been my thing because I like to hold full volume instead. So I'm going to just go through this trade and explain what the rationale behind taking this trade was. As you can see, my charts are pretty clean. I don't really mark a lot of things up because when my charts are clean, it gives me a better insight as to what's going on. So essentially you can see pretty clear equal highs here, right? So these equal highs were crystal clear for me, and this wick whipped it, and we had an impulsive move that was created. So essentially this was a liquidity grab from these equal highs, which created this zone. So I had this zone marked up. If we rewind a little bit to the 1 minute, right, I had, let's go back to this first initial. Yeah, so we had our first initial tap. I don't really refine my zones too much, but I look at the bigger zone and I take the trade off the reaction it gives me, because if it's gonna push up to the refined zone, then be it. If it's not, then I'm still gonna take it anyways. So initially on the first tap, what I did was, obviously you could wait on the 1 minute and look for a trade. I tend to take more trades on the seconds nowadays. It's something I find a lot better because it lets me enter a bit earlier in case there isn't a 1 minute mitigation or clear 1 minute mitigation, basically a confirmation entry. So what happened was, essentially we tapped in. You could see an impulsive move that was created, and if you sort of look at what's happening, we are basically creating creating bearish order flow. So at this point, when we had this slightly impulsive move down, had a break of structure here, so I put a trade here. So basically had an order set here, waited for price to tapped me in, and it pushed down in a bit, right? So we had a push down and we did break structure again. So technically speaking, we are in bearish order flow at this point, right? Because this high is protected because we created a low. But in this case, that wasn't the case because we ended up pushing right back up. However, what one of my rules are is, once you have a break of structure, I know some people tend to have TP sort of put stop loss entry once they hit maybe 3% profit or 2%, whatever it is. It works as well. But whenever I see a break of structure, I tend to just put stop loss entry, break even, and then just let the trade run. So in this case, price pushed up and I got taken out at break even. But if you look all the way on top and look at the extreme point, it was these candles over here which essentially created the move down. So if you look into just the theory behind decisional candles and extreme candles, you'll understand that a lot of times either the decisional works or the extreme works. And recently speaking with certain pairs, the extremes have been working a lot more. Not to say the decisionals don't work, they do work. As you can see in this case, we got mitigated, we pushed down. Obviously we didn't follow through, but that's fine because that's how trading is. And one of the things I tell a lot of our members is, just because your decisional fails doesn't mean the extreme's gonna fail, because if it matches all your rules in the trade, if it's reacting off a zone that's completely valid, most likely it's going to tap off the extreme and push down, and in this case it did. So when I got this trade set up, I also had my eye on the extreme. So I also had an order set here. Usually what I do is I set 2 orders, and I'm completely fine with that, because if this trade fails, this one's going to do well and follow through. So completely okay with that. So yeah, we had this extreme zone, and this was the whole leg that was created. Obviously you can see how this might seem like a complex pullback all the way up. So this was the trade that was taken. Obviously some people might be wondering, why not take a 1 pip stop? Mainly because with GU, the number of times I've taken a 1 pip stop, and just slightly wicked out by my broker is too many times. So I tend to avoid that and just stick with 2 pips or 1.5. In this case I just took 2 because I already had the lot size set in and everything, so I just left it as it is. There's no need to really put it even lower just to get a few more R, because if you're safe and you're getting 40 R, I mean, what else do you really want, right? So this was the trade that was taken. Got tapped in and price pushed all the way down, right? Essentially you can see how price pushed, and as soon as we broke this point, we have stop loss to entry. Didn't break it yet, broke it, so stop loss to entry now. And let's just move to the 2 minutes so we can see it push down, right? So essentially price kept pushing down, and one of the things I mentioned is if you look on the 1 minute, there are quite a few continuation trades you could have taken. This is one of the zones. There's another zone here. I think it was more clear on, yeah, it's in the 1 minute. So you have another zone here. So broke structure, it's just going to continue. If it's bearish order flow, it's just going to create, these essentially are just pullbacks. So that was another continuation trade. You have a mitigation there, push down, another break of structure, another mitigation, and you have a push down, right? So there were a few, basically 2 continuation trades that could be taken. I'm pretty sure there might be more here, but yeah, there's another one here and here. So when price pushed all the way down here, and when I saw this immediate reaction up, right, I closed my trade earlier because at 40 I'm pretty satisfied, and if this does follow through and go up, then I'll just keep looking for longs at this point. So yeah, that was basically the trade. Now obviously if I held this trade, where would I have really set my target? Because of where we are situated now in this area, if you look on the 12 hours, you can see that this was essentially a 12-hour zone, right? And you can clearly see, I usually use this tool because it just shows me everything, all the lower highs, the high highs, higher lows, everything. And you can see this inside bar just sitting there. We have a break of structure, so this is a decently valid zone. Obviously if you look at this, it is technically speaking a counter trade, but if you look on the weekly, all we are doing now is sort of a pullback. So we're going up, pullback, and we might go up again, so you never really know, right? So we did tap into this 12-hour demand zone, and because of that I did close my trade earlier, and I do not regret it, because if it did push down, there's obviously going to be more scalings that you can take on the way down. But yeah, this was the GBPUSD short I took. It's a pretty simple short. Wasn't a lot of confusion about it. Obviously the first one was break even, but I'm not too concerned about it because the second one did come through. So yeah guys, that will be all for this video. I hope you've learned a bit from the trade recap. It's a pretty simple one, but that's really how we all trade at SMT. So yeah, have a wonderful week everyone.